Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Pada sidang akhbar ini, Bank Negara Malaysia akan menyampaikan taklimat mengenai prestasi pertumbuhan ekonomi negara pada suku kedua tahun 2019. Taklimat ini juga merangkumi perkembangan monetary dan keuangan di Malaysia. Please allow me to continue the presentation in English. The global economic environment remains challenging. The slower growth performance across advanced and emerging economies in recent quarters has been due in part to weakness in external demand amid escalating trade tensions. In addition, the prolonged trade tensions have contributed to uncertainty and volatility in financial markets. According to the IMF's latest July World Economic Outlook, global growth is projected to moderate to 3.2% in 2019 from 3.6% in 2018. This growth moderation is reflected in the monthly manufacturing PMI indicator, which continues to point towards lower manufacturing activity across regions. The worsening trade tensions between the US and China have led to weak global trade activity as well as heightened uncertainty, which have clouded the investment outlook for businesses. Despite the challenging external environment, Malaysia's growth performance remained resilient in the second quarter of 2019. Private sector activity continued to anchor growth. Recovery in commodity output and higher net export provided further impetus to economic performance. Weak public investment, however, partially offset the improvement in growth. The Malaysian economy registered a stronger growth of 4.9% in the second quarter of 2019 compared with 4.5% in the first quarter. All economic sectors expanded. The mining sector registered the first positive growth since third quarter 2017. The positive outturn was supported mainly by the recovery in natural gas output following the pipeline disruptions in 2018. Growth in the manufacturing sector improved on account of better performance of the domestic-oriented industries, while growth in the construction sector was slightly higher due mainly to improvements in high-end residential activity. Services continued to expand, supported by sustained performance in the wholesale, retail and motor vehicle segments. In the agriculture sector, growth moderated due to the decline in the fishing and forestry segment and weaker natural rubber output. This had partially offset the continued recovery in crude palm oil yields from the adverse weather conditions in 2018. On the demand side, growth was supported mainly by the continued expansion in private sector spending. Growth was further lifted by stronger net exports, which reflect a contraction in imports amid sustained export growth. Private consumption growth improved from 7.6% to 7.8% as real income growth of 3.6% continued to trend above its recent average. Government measures such as the Aidilfitri Special Assistance and Bantuan Sara Hidup also provided some lift to overall household spending during the quarter. Looking ahead, private consumption growth is expected to remain supported by continued income growth, stable labour market conditions and supportive government measures such as outstanding income tax refunds. Private investment expanded by 1.8% in the second quarter. This was driven by higher capital spending in the manufacturing and services sector. However, looking ahead, investment activity will likely remain subdued amid continued headwinds from global uncertainties and persistent weakness in the property market. On the external front, export growth turned around to record a marginal positive growth of 0.2%, while import growth registered a smaller decline of negative 1.2%. Malaysia's diversified export base mitigated the impact of weaker E&E exports following a recovery in non-E&E and commodities. This is also reflected in the resilience of Malaysia's export growth compared to regional economies. Moving forward, notwithstanding the uncertainties, Malaysia's exports will be driven by demand for growing niche product segments where Malaysia is well plugged into, such as the automotive, medical and aerospace industries, and continued recovery in commodity production. We continue to monitor developments surrounding trade tensions closely. As such, we have a follow-up box article, the third in a series of articles on the ongoing trade tensions. Trade tensions have re-escalated since May 2019. This was followed by a series of developments that swung between escalation and de-escalation, sometimes within a span of just a few days. The persistent trade disputes may have structural implications in addition to the adverse impact of trade disputes on global growth, volatility in the financial markets, and sentiments. The prolonged disputes could also likely lead to a reconfiguration of global value chains. This offers opportunities which Malaysia should be ready to take advantage of. In addition, we have updated our downside risk assessment of the impact of trade disputes on global and Malaysia's growth. Our latest assessment indicates that should trade disputes escalate further, global growth is expected to be lower by 0.1 to 0.2 percentage points. Consequently, Malaysia's GDP growth could be lowered by a further 0.1 percentage points in 2019 through lower trade, income, and investment activity. The current account surplus of the balance of payments remains sizable at 14.3 billion ringgit, or 3.9% of GNI. The goods surplus narrowed to 28.1 billion ringgit as the improvement in import growth outpaced export growth. Meanwhile, the primary income account registered a smaller deficit of 5.5 billion ringgit, due mainly to the increase in investment income earned by Malaysian firms abroad. Looking ahead, the current account is expected to remain in surplus, driven by the continued goods surplus. The financial account registered a net outflow of 18.6 billion ringgit, following higher direct investments abroad, more moderate foreign direct investment flows, and a reversal of non-resident portfolio investments. DIA was mainly channeled into the services and mining sectors, while FDI benefited the real estate, financial services, and manufacturing sectors. Higher risk aversion in the financial markets following adverse international developments led to a reversal of non-resident portfolio investments amounting to 5.1 billion ringgit during the quarter. Let me now move on to highlights in the monetary and financial developments during the quarter. Headline inflation increased to 1.5% in June 2019. The increase mainly reflected the lapse in the impact of the GST zeroization. Headline inflation in the second half of 2019 is expected to average higher compared to the first half of 2019, following the lapse in the impact of consumption tax policy changes. Underlying inflation is expected to remain stable, supported by the continued expansion in economic activity and in the absence of strong demand pressures. The performance of domestic financial markets continued to be affected by global developments. Volatility in global financial markets remained elevated as investor sentiments were weighed by continued uncertainties surrounding the trajectory of US monetary policy, as well as global trade and growth outlook. As a result, domestic financial market prices remained volatile. The ringgit depreciated against the US dollar, in line with regional currencies. The performance of domestic bond and equity markets, however, were mixed and is reflective of both global and domestic developments. Going forward, intermittent periods of volatility should be expected as external uncertainties continue to cloud the outlook. The Malaysian government bond market remained resilient and stable relative to the regional market despite recent volatility arising from escalation of trade tensions and central banks' dovish pivots. Non-residents recorded net inflows in July as investors were seeking for yield amidst dovish sentiment. Non-resident holdings increased to 22.2% as at end July versus 21.5% as at end the second quarter. Long-term investors remain as key holders of Malaysian government bonds, with 50% of non-resident holdings attributed to central banks, governments, pension funds, and insurance companies. Malaysia's external debt increased by 27.4 billion during the quarter. The higher external debt largely reflects net drawdown of interbank borrowings and intercompany loans and exchange rate valuation effects. Banks' external debt, which had steadily trended downward for 3 consecutive quarters since the second quarter last year, increased by 25.2 billion in the quarter. This increase was driven by foreign banks' lending and investment activities and centralized liquidity management operations of domestic banking groups. In line with the continued expansion of domestic banking groups' regional operations, banks' external assets also increased. Overall, Malaysia's external debt remains manageable given its favorable currency and maturity profiles. The bank continues to undertake development initiatives to ensure orderly market conditions and sufficient liquidity. As a result of the various development initiatives undertaken by the bank, the average daily FX volume have increased to more than $12 billion from a 5-year average of $10.4 billion, while average daily forward market volume has doubled compared to levels recorded in 2016. Since May, an additional 9 investors have registered under the dynamic hedging program, bringing the cumulative total to 97 investors, managing an asset size of $34 billion. Approvals have also been granted to provide flexibilities for registered investors to undertake dynamic hedging above the 25% limit. Following continuous engagements with market participants and in line with ongoing efforts by Bank Negara to enhance accessibility and liquidity, I am pleased to announce 4 new initiatives. A pilot program with an identified group of AOOs will be introduced to provide additional flexibilities for AOOs to facilitate the efficient pricing of ringgit transactions with non-residents after onshore trading hours. To further boost liquidity in the secondary bond market, principal dealers will quote all of the run bonds available under the bank's securities operations beyond the existing commitments to quote benchmark bonds. A standard documentation guide for FX transactions have been published on Bank Negara, AIBM, and the Financial Market Association Malaysia's website for reference by all market participants. And lastly, the bank has also issued revised repo guidelines for industry consultation and feedback, incorporating new flexibilities such as a longer tenor limit and a wider range of repo securities. I would like also to announce the liberalisation on 4 foreign exchange administration policies to promote greater efficiency in risk management by corporates. First, freedom for residents to fully hedge their underlying foreign currency current account obligation. Currently, this is limited to 12 months. Second, treasury centres are now free to hedge on behalf of their related entities. For non-resident treasury centres, a one-time registration with the bank is required. Third, non-residents are now free to hedge their ringgit exposures arising from trade in goods and services on an anticipatory basis via AOOs. This flexibility will also enhance non-residents' access to ringgit for trade purposes. And fourth is the redefinition of domestic ringgit borrowing in relation to FEA measures on investment abroad. Under the revised definition, ringgit credit facilities used as a payment instrument for miscellaneous expenses such as corporate credit cards are excluded from domestic ringgit borrowing. These measures will take effect on 30th August 2019. Domestic financial stability was preserved in the second quarter of 2019. The financial system remained resilient, while domestic financial markets continued to function in an orderly manner as confidence in the financial system was sustained. The banking system and insurance industry remain well capitalized to meet unexpected shocks. As at end June 2019, excess capital buffers of the banking system and insurance industry remain strong at 103.3 billion ringgit and 29.6 billion respectively. Stress tests affirm financial institutions' resilience to severe macroeconomic and financial shocks at the system level. Banking system liquidity remains sufficient to support intermediation. All banks maintain liquidity coverage ratio above the minimum 100% requirement. Household and businesses, including SMEs, continue to access financing as reflected in the steady disbursement levels trending higher than historical averages. However, repayments were also higher across segments during the period, leading to lower outstanding loan growth. Furthermore, the pace of lending activity is a function of the state of the economy. Given the more moderate economic growth in recent periods, it is natural for demand for financing to be slower, as reflected in the subdued loan application growth. Nonetheless, demand for financing showed some signs of improvement in the second quarter as loan applications rebounded to positive growth. It is crucial that the pace of lending activity is commensurate with economic expansion. Rapid credit growth that is disconnected from real economic activity could result in significant imbalances and financial vulnerabilities. These vulnerabilities, such as elevated household indebtedness, if not well managed, can hamper sustainability of economic growth, especially in the event of unanticipated shocks. The OPR was maintained at 3% at the July MPC meeting after the adjustment in May. The NPC will seek to ensure that the monetary policy stance remains conducive to sustainable growth amid price stability and constantly review for any material shifts in the balance of risk to the outlook. Looking ahead, we continue to expect Malaysia's GDP growth to remain within the projected range of 4.3 to 4.8%, underpinned by continued strength in the private sector activity. Clear downside risks remain in the immediate horizon, stemming primarily from external factors. Bank Negara Malaysia will continue to remain vigilant and monitor this risk and its implication on overall growth trajectory. This marks the end of the presentation. My team and I from Bank Negara and Datuk Sri Dr. Muhammad Uzaid and his team from the Department of Statistics will be pleased to take your questions.